If you are buying space stocks, do not grab a name just because it says space. Before June 2026, I felt something was missing from the space sector because SpaceX was not listed yet. Then it listed, and I thought the sector was finally complete. But the gap got wider instead. You see, SpaceX is a $1 trillion company, while the popular Tier 1 names sit around $20 to $40 billion. Below that, you are mostly looking at low single billions. Same word on all of them, but very different ways of making money. Why is there a gap? We look at the revenue stream. Some already run a real business that brings in cash. Some are still selling the dream. Rocket launch, satellites, data, and hardware are not the same bet either, because each category has a different size of opportunity underneath it. Today, we walk through those categories, what already works and what is still selling the dream, so you can buy the ones that actually make you money instead of draining it. I have a master's in aerospace engineering, specialized in orbital mechanics. So when a friend asks which space stock to buy, I do not start with the ticker. I start with whether the company already makes real money from a real operation. Rocket Lab does. It flies and paying customers use those flights. In Q1 2026 alone, Rocket Lab brought in $203 million in revenue, and it closed that quarter with $2.2 billion in backlog. It is not a pitch deck company. Cash is already moving through the business. AST SpaceMobile is the contrast I use the most. It has huge satellites. Each bluebird is built around a 2,400 square foot antenna, 35 to 40 times larger than the direct-to-cell antenna on a normal Starlink satellite. They also talk a lot about big partnerships. But look at the real stuff. Q1 2026 revenue was $14.7 million. Even their own 2026 guide is only $150 to $200 million. And a chunk of what they are collecting now is still early milestone money, partner money, and government money, not a mature consumer phone business throwing off cash every month. So one name is already working. One is still selling the dream. If you reverse those, you can sit in the wrong risk for years and you think you own space. That is the #1 criteria on selecting space stocks. From there, we segment by the actual business they run, because launch is not data and data is not hardware. Category 1. Launch. This is the category most people think they bought when they hear space. SpaceX sits at the center. But you already know that it is not just a rocket company. In 2025, SpaceX did $18.7 billion in revenue. The connectivity part, mainly Starlink, did $11.4 billion of that, and that was the part making real operating profit. Launch matters, but it is not the whole cash story. Rocket Lab is the popular stock that already flies. The small rocket Electron launches with paying customers. That $200 million quarter and $2.2 billion backlog we just talked about. The medium rocket, Neutron, is scheduled to fly later this year. They are also trying to buy Iridium for $8 billion. Deal signed late June 2026 and expected to close mid-2027. Keep that in mind. A launch company is trying to buy a satellite communications business that already makes money. Firefly is another launch name people are talking about. Alpha is their rocket, but look at where the money came from. In Q1 2026, Firefly did $80.9 million in revenue. Spacecraft work was $67.6 million of that. Launch was only $13.3 million. So even inside launch, you might be buying lunar landers and defense spacecraft more than rockets. If the word on the screen says launch, are you buying flights that already fly or a company that still needs the next rocket to matter? For launch segment, the working test is simple. Who is already flying for customers? The dream test is also simple. Who needs the next unproven rocket to justify the price? Category 2. Satellites. This is where people get confused the most, because everything with an antenna gets called the same thing. We already covered AST SpaceMobile. Huge satellites, big story, and thin cash next to the dream. Iridium is the other side. Real satellite service money from voice, data, trackers, and government users. In Q2 2026, Iridium did $225 million in revenue and it made a profit. Most of that was recurring service money. Customers keep paying. And yes, Rocket Lab is trying to buy it. Until that deal closes, Iridium still have trades on its own. Wiresat is the big mature name. Full year revenue was $4.6 billion. They sell connectivity to planes, ships, and government networks. That is a wide satellite and network business, not a twin of Starlink's home internet product. EchoStar, ticker ECHO now, is a special case. I hold it and I've told that story on this channel already, so I'm not reopening the full deep dive here. Short version, it has a path into SpaceX stock, about 261.8 million shares, and the AT&T Spectrum cash closed on July 28, 2026. After that close, EchoStar paid down a lot of debt and became more of a SpaceX equity story. Recurring service money versus a story about phones in the sky. Which one did you think you bought when you typed space in the search bar? Working test for satellites is this. Who already bills customers every month? Dream test. Who still needs the big constellation and the consumer product to show up in the revenue line? Category 3. Data. Data is not launch. These companies sell pictures and insights about Earth, not rights to orbit. Planet Labs is the clearest public name here. They sell daily images plus software that turns those images into answers. In the year that ended January 31st, 2026, Planet did $307.7 million in revenue. The next quarter after that, they did $94.2 million. A lot of that sits in contracts that renew with defense, government, and commercial buyers. Still not a clean profit story on paper, but the business is clear. They sell Earth Change as a product. Black Sky is smaller and does more one-off tasking jobs. Full year 2025 revenue was $107 million. More of their work goes to government and intelligence customers, and the contracts can jump around quarter to quarter. Same category as Planet, just a different size and a different customer mix. When the chart says space, are you buying a rocket or a camera business in orbit? You might be thinking,
Daniel, why don't we just buy SpaceX and that's it?
Hold that, we are coming back to it. Let's finish the categories first. Because if you jump to SpaceX too early, you miss what else is under the same word. Category 4. Luna and NASA work. These companies get paid to deliver cargo, landers, and other hardware for Moon and NASA programs. Intuitive Machines is the main public name. Moon landers, NASA jobs, and space infrastructure work. Q1 2026 revenue was $186.7 million with $1.1 billion in backlog. Part of that jump came from buying another company, so bear in mind. The money still comes from NASA milestones and related programs. If a landing fails, the story hurts. If NASA is almost the only customer, that also hurts. Firefly also plays here through Blue Ghost Luna work. Same company you saw under launch. That is the point. One stock can sit in two categories. Your job is to know which cash you are actually betting on. If NASA funding shrinks, does this business still have a customer, or is the whole story gone? Working test. backlog and jobs that turn into cash, dream test, one nice landing video, and a stock price that assumes 10 more. Category 5. Hardware. These are the picks and shovels. They build the parts that other space companies need. MDS Space builds satellites, robot arms, antennas, and Earth intelligence systems. It is a Canadian company, but it also trades on the NYSE under MDA, so a normal US brokerage can buy it. Q1 2026 revenue was 464 million Canadian dollars and adjusted EBITDA was $91 million. This is not a pre-revenue story. They already get paid to build for other operators and governments. Redwire sells space hardware and also sells to defense customers. Q1 2026 revenue was $97 million. So you are not only buying pure commercial space here, you are buying a mix of space parts and defense work, which is different from owning a launch company that flies the rocket itself. And to be honest, their presentation slides need better design. I could not even see the numbers clearly. When these companies talk about a satellite bus, they do not mean a city bus. Think of a body of the satellite, the frame that holds the power, the computers, and the payload. Like the chassis of a car, the cameras or antennas sit on top of that body. Working test for hardware companies, real program money and ideally profit. Dream test, tiny sales and a slide deck full of future satellite bodies that are not built yet. Category 6. The trap. I'm going to say this straight because I fell into it. Virgin Galactic SPCE sells the dream ride, a ticket to go up and come down. The next number I'm about to tell you, I reread 3 times before I believe it. In Q1 2026, the revenue was $0.2 million compared to $0.5 million in the prior year. Can you imagine seeing a $200,000 revenue figure on a public listed company? Now, why are people interested in buying SPCE if it sucks? Because of its market cap. It is now only valued at around $340 million. They still had $251 million in cash and short-term investments, and free cash flow was negative $93 million that quarter. Same word, space, but a completely different money reality. I held SPCE around $3 and sold at break-even. I am not proud of the trade. I'm telling you because the label fooled me the same way it fools everyone. The name sounds exciting and almost no cash is coming in. If the product is a ticket for rich people and the revenue is basically zero, what exactly did the word space buy you? That is the trap in your head. I will not put a big piece of my money here. If the breakdown is useful, hit like and subscribe. And tell me in the comments which of the space stocks above you want me to deep dive next. Okay, back to the question I asked you to hold. You might be thinking again,
Daniel, why don't we just buy SpaceX and that's it?
on the business side, that can be a real answer. SpaceX Q1 2026 revenue was $4.7 billion by itself. Launch, Starlink connectivity, and AI under one listed company. For a lot of people, that is enough space exposure. But you are not buying the company, you are also buying Elon the person. Tesla already showed you what it costs. When what he does or says is not what the public wants to see, the stock price can be compressed further even if the companies are doing better than ever. So yes, SpaceX can be enough. Just know the second risk you are signing up for. If SpaceX alone is your whole space bet, are you okay owning the business and the person as one package? So the move is simple. Category first, working versus dream second, ticker last. Before you buy the next familiar ticker, can you say in one sentence whether it is already working or still selling the dream? If you want a basket instead of picking single names, I already broke down the space ETFs, including the ones tied to SpaceX, in another video. Click here to watch it now.